Oh, thank you. I appreciate everybody taking some time today out of their probably busy days to, talk about something very exciting such as sales tax. Want to just kind of jump into the presentation and okay, it's not forwarding. I had the same problem in the one I did earlier today. So let me just see what's going on here and get this. There we go. Okay, what we will discuss today, well, we're going to talk about, where things are with sales tax today and kind of where we expect things to go in the coming years around sales tax. Obviously, there's a lot more to sales tax than what we're able to cover in an hour presentation, but we want to give you some ideas of some important, in our experience, what we feel is good advice for clients to consider when they deal with sales tax. What your options are around, what you need to do to be compliant, and obviously Avalara, what we can do as far as helping clients out regarding sales tax and getting a more automated solution. And then there'll be a little special offer at the end of the presentation also. Sales tax is not easy. There's many, many reasons why it's not easy. Some of those you'll see listed here on the screen. One of the biggest ones obviously being there's 11,000 tax jurisdictions around the country, and I don't think a lot of people realize that there are many, many tax jurisdictions to deal with. And depending on what your states you're selling into, you can have multiple different entities that you're dealing with. But there's all kinds of reasons why this is hard, not limited to just the items on the screen. There's taxability questions, there's Nexus questions, and then on top of it all, once you understand it, they change the rules because there's 4,500 roughly tax law changes and boundary changes that happen across the United States in a year. So once you think you've got a good understanding of what's going on, they change the rules on you. So it makes it very difficult to keep up and understand what's going on around sales tax. And when I mentioned earlier that there's 11,000 tax jurisdictions around the country, this is a map of the United States, and every one of those different colors represents a different taxing jurisdiction. We are becoming more of a global economy. Companies that generally just sold regionally are selling internationally into Canada as well as across the United States. They're trying to expand their markets. As you expand your footprint to where you sell, it only gets more complicated and what you have to deal with. This slide's great because nobody loves sales tax. I can say I love sales tax because it's the reason I have a job. But at the end of the day, there's nobody I've talked to that goes to work in the morning knowing that they have to fill out sales tax returns and figure out what the sales tax rate should be and is excited about doing that. At best, it's a pass-through item. You are required by law to collect it, manage it, and submit it to the states, but it's not a fun process for anybody to do, especially the way things have been done in the past. And as far as what are some challenges around it, obviously it's a requirement. You don't have the option. If you sell a product or service, whether it's you're selling to tax-exempt organizations or not, you are required to record and manage and file a remit depending on your Nexus situation within those states. Traditionally, it's been a very manual process in figuring out tax. Tax tables have been used in the past, which are loaded into a system. They can be very tedious to get into the system. And then every time a tax law changes, you've got to be aware of the change. You've got to update it in your system. But it doesn't. The sourcing rules behind the rate tables are basically based on zip codes or zip code +4. So the whole process from figuring out what should be taxed, where you have Nexus, what your taxability is on the items that you sell, to getting the information into your system, to processing an order or completing a quote is a very manual process. And this is completely a pass-through item. Your company makes no money off of this, and realistically they lose money because the compliance side of it, keeping track of this, hiring people to manage this process costs money. So it's a complete pass-through item at best. As far as the current climate goes, it's not a pretty situation. States are short money. We all read in the papers every day that this state's short this much off the budget and revenues are down. States are looking for ways to increase revenue without increasing taxes, because once they start increasing taxes at this point in this climate, they're not getting reelected. So they're doing everything that they can to avoid that. And one area that they're going to, one key area, is sales tax revenue. If you look at the revenue generated within most states, it's either the number one or number two generating activity around revenue for states is going to be it's going to have to do with sales tax. It's either payroll and then sales tax, or sales tax if there's no payroll within a state such as Texas. States are hiring auditors because they feel that they're losing out on a lot of revenue. So they're hiring auditors to go out and proactively look for lost revenue. And auditors' job performance is based on how much money they find for the state. And as I mentioned earlier, they're changing the laws. The definition of nexus is changing. Nexus used to mean a physical presence, a building, brick and mortar building in a state. But the definition of nexus is changing, and it changes in some cases monthly. States like Minnesota, advertising in the yellow pages is a nexus generating activity. So again, you may understand what nexus is and where your nexus is today, but if a state changes that law around nexus next month, that could change the rules completely for you. Economic nexus, I'll talk about this in a little bit more detail, but this is a big change that's going on in a lot of states. I think about 4 or 5 states have passed economic nexus laws recently, which means that it doesn't matter whether or not you ever step foot in that state. If you sell a certain amount of business within that state, you're going to be required to file a remit in those states. So these are all reasons why it's getting more and more complicated. I'd like to say to you that it's going to get easier, but it's only going to get much more complicated and much more difficult to manage the process. Sales tax is revenue for the state. There's no question. And again, they've got budget shortfalls, so the only way to increase revenue in their mind is to go after revenue that they feel is rightfully theirs already, and they're going out and doing that and looking for that. Your chances of being audited are higher than they've ever been. The slide before this mentioned how many auditors the state of Idaho hired in the last year. I guarantee you if you go on any site today, any state site that has employment on it, the majority of the jobs on there are going to be sales tax auditors, because sales tax is an area, again, where they feel that there's they're not getting all the revenue that they should. So your chances of being audited are higher than they've ever been, and it increases. Even if you do everything right, the cost for you, the business, is much higher. I'm sorry, the cost for you, even if you're doing everything right, is going to be high. You have to prepare for the audit. You have to, once the audit's complete, you have to go through, in many cases, do an audit defense, because the auditor may have found a couple of things. And I don't know, for those of you that haven't been through an audit before, the way it works is the auditor will come in, go through. If they find some issues, they're not going to go and look through every transaction. They're going to take those transactions, figure out what your total transaction amount is, and multiply that issue times that amount and hit you with a bill for that. Even though you may have made one mistake, it could be thousands of dollars out of your pocket for one small issue. One thing that we do recommend that you read is there is an Aberdeen white paper on the site that talks about, on our site, that talks about cost of doing things manually for small, medium, and large companies, cost of audits, a lot of detail around what it costs for companies to manage sales tax. So I highly recommend that you guys go to the site and download this brief, because it gives a lot of great valuable information. And I'm stuck again, so let me see if it gets going. Hopefully it doesn't go too many slides ahead. Nexus, this is a big question. What is the definition of nexus? Traditionally, nexus, as I mentioned earlier, is a tangible physical presence within a state. But this nexus is changing. Nexus generating activities can be, as I mentioned, Minnesota. Advertising in the yellow pages can be considered a nexus generating activity. Going to more than 2 trade shows in the state of Texas, whether or not you ever step foot in Texas again, if you go to 2 trade shows in Texas, that can be considered a nexus generating activity. Hiring a subcontractor to do work for you, or 1099 employees, can all be nexus generating activities. One of the disadvantages to you is that the people making up the rules are the states, and it's up to them to determine what nexus is, and they're redefining what nexus is on a regular basis. So it doesn't make it easy for you to keep up with that information. On top of that, you've got sourcing issues. Most states are destination-based. Where it's shipping to determines the tax that's charged. But then you have origin-based states, you know, such as Ohio, where it's shipping from. If it's within Ohio, you're shipping from one county within Ohio to another county in Ohio. The ship from location is the determining factor of Nexus and the amount to charge sales tax. But then they got to complicate it more. Then there's mixed states that do mixed sourcing. You know, your origin-based states are Arizona, Illinois, Missouri, New Mexico, Ohio, Pennsylvania, Tennessee, Utah, and Virginia. But a lot of these states are going away from origin-based and making destination-based because the feeling is that other municipalities are losing out a lot of revenue for items that are being shipped into their areas. Your mixed states are California and Texas. Everything else is pretty much destination-based. Filing. This is always a challenge for customers. If you're dealing with the state of Alabama, Alabama is one of those, in many cases, states will collect the sales tax for a particular client and then they'll redistribute to the individual municipalities. But in certain states like Alabama, you have to electronically or file paper with each municipality. So for the state of Pennsylvania, for example, if you sell into somebody that lives in Philadelphia, the city of Philadelphia, you have to file a separate return with the city of Philadelphia and pay them directly. Not all of these municipalities accept electronic payments and or forms. Sometimes they need paper checks and they need paper forms submitted in. So it makes it very taxing, and this could change in an instance. And then you're dependent on getting those notices from the states and updating your information correctly. So it's a huge challenge understanding where you file and who you even pay. You want to pay, but you never know who to pay. Prepayments. Jurisdictions, a lot of jurisdictions require prepayments. Once you've got some history, if the client's moving in a new jurisdiction and they've never filed there, they're going to go through the normal course of business. But depending on how much business that they do within that jurisdiction, they may be required to make prepayments. Also makes it very challenging because just calling into state to finding out how often you need to file and whether or not you're going to be required to do prepayments is very challenging because they don't always know the transactions they have within the state and how much volume is and dollar amounts and everything. There's some sort of formula that they have that determines this, but it's not something you just call somebody off the phone and provide information and they give you an answer. So this is one of those things where you basically need to start selling into the state and you're going to learn as you go. So it's more reactive, which doesn't make it easy at all. As far as sales tax go, we highly recommend on a monthly basis that you reconcile your sales tax to your payable account. Identify the amounts for each municipality. Subtract any credits they may have. Reconcile it. Reclass any orders that need to be. A lot of customers we found wait to the end of the year to do this, which puts you kind of behind the 8 ball, and God forbid an audit shows up, then you're going to have to go through and do this for the entire year. So we recommend that on a monthly basis, after the month, doing your month close, that you go through and reconcile your sales tax. So that way at the end of the year, you're comfortable with where the numbers tie out. Simple thing, you would think, but what we find is a lot of clients don't confirm that the checks have been cashed by the Department of Revenue for where they're sending those. It's important because if the check, one of the first things they're going to do is cash the check. So if the check hasn't been cashed, there's a good chance they haven't got your return. If they haven't got your return, then you're a delinquent filer, and then that can trigger all kinds of things. You know, from your banks being, bank accounts being frozen, to we've had somebody that didn't know that a check wasn't cashed. They say they never got the notice, and the sheriff showed up at the door to padlock the doors, and they didn't know anything about it. So a good way to make sure that your filings are being done. If they've cashed a check, you know they got the filing. Doesn't necessarily mean everything's correct in their eyes, but at least you know they got the filing. So it's an important part of the process is to make sure those have been cashed. As I mentioned earlier, the filing frequencies can change pretty dramatically. So notices are sent out, but they don't always make it to the right person. So you want to stay up to date and current on when your jurisdictions are changing. What we recommend to clients is whatever your fiscal year is, at least once a year, as you head into your new fiscal year, verify with the municipalities that you're filing with on what the requirements are going to be. for the coming year. Again, they could change those mid-year, but at least then you've got a good understanding, and you're in a better position to make sure that you're filing information correctly. Product taxability is a big question. You know, the items or services I provide, I have no idea how they should be taxed, depending on the jurisdiction that they're going to. I've never sold into California, into LA County. How is my stuff taxed there? This is one of the main reasons why this is difficult. You and I look at these two different, you know, pieces of candy, and we consider them both candy. Well, two states actually consider these two different items. And it's simply because one has flour in it and one doesn't. So one is considered food, one is considered candy. This doesn't make it very easy to do sales tax, obviously. It makes it much more complicated. And if you're doing things manually, it makes it even more complicated to do. So understanding the taxability of the products and services that you offer is very important. Understanding where you have Nexus and the taxability of what you sell, the items that you provide or services that you provide, is a key to being in compliance. An ideal client that wants to be, you know, as much as they can compliant, has a good Nexus study done by, you know, a CPA, does a taxability study around the products and services that they offer, and then they use that information to implement some sort of system around sales tax and collecting and calculating sales tax. Exemption certificates are a huge part of being compliant. When auditors are going out and looking for revenue for states, one of the first areas that they're going is where sales tax hasn't been charged. Because in their mind, there's huge upside there. And don't kid yourself. Auditors are measured on the amount of revenue that they generate and find for the state. So if you're an auditor, you're going to go and look for somebody that charged 6.25 when they should have charged 6.35 tax, or you're going to go where somebody didn't charge tax and they should have. So companies that, like distributors, the company that only distribute products, their chances of being audited these days are higher than anybody, and they've got to make sure they've got the right systems in place to collect those exemption certificates. Auditors are going to be looking for a repeatable process in place to manage and maintain and record those certificates. Making sure you're tracking expiration dates. Information is up to date and current. Florida, tax-exempt certificates expire every year, so they have to be recollected. That's always a lot of fun for customers to do. So whether you're, obviously storing them in a 3-ring binder is better than not storing them at all. Storing electronic copies of them is huge. Being able to tie back each transaction to each certificate is what an auditor is going to be looking for when they come in. A lot of times people don't even know what an exemption certificate looks like or where they get it. I've had many times where I've called somebody and said, I need your exemption certificate, and they send me, their, it's something to do with property tax or some other form, and they're not giving me the correct forms. So making sure you're collecting and maintaining those certificates and managing that process is very important. Notices. Notices come. A lot of times they're not written with much information. So people aren't sure what to do with them. Making sure that you respond to those notices in a timely manner can avoid serious problems. We've seen plenty of situations over the years with customers that have gotten a notice and not really dealt with it because they weren't sure or they didn't feel that they were obligated to file in that particular state or municipality, and they've let that notice sit. And then once it goes beyond a certain amount of time, your ability to respond to that becomes less and less. So responding to the notice in a timely fashion, understanding what the notice means and what information they're looking for is very important. Zip codes. As I mentioned earlier, traditionally, zip codes was the way to manage tax jurisdiction assignments. The challenge around using zip codes as your basis for assigning tax jurisdictions in many municipalities is that tax jurisdictions do not match up to those tax jurisdictions. If you look at a map of Colorado, for example, you'll see that there's only a few zip codes throughout the whole state, but there's 56 different taxing jurisdictions within the state. And zip codes change sometimes on a monthly basis. So just if this is the way that you're managing tax codes, I saw a study about 6-8 months ago where it said for an average customer that's selling into an average of 10 states or more, if they're using zip code or zip code plus 4 as a basis for tax jurisdiction, there's a 60 to 65% chance of being accurate. I don't know about you guys, but I've never run across an accountant that wants something that's 60 to 65% accurate. That's never acceptable to them. And the reason why it is because you've got situations like this. So here we have a bunch of different zip codes in the state of Colorado. So the zip codes are based on the white lines, but the tax jurisdictions are the different colors. So as you can see, this zip code has 3 different tax jurisdictions. This one has 2 different tax jurisdictions, 3, 2. This one's got 1, but it's got this little area up there that's got another one, so it's actually got 2. And the rates can be dramatically different. So one of 2 things is happening. You're either undercharging your client sales tax, which isn't going to make the state happy, and we all know how difficult it is to go back to a client and ask for more money later after an order's been completed and paid for, or you're overcharging your client sales tax. So this is one of the biggest challenges that we run across with clients, is making sure that they collect the right sales tax based on the jurisdiction assignment. And as you can see by this Greenwood Village 8011 zip code, there's a lot of different taxes that go to making up that tax amount. I didn't know until I started this job a year ago that LA had a subway, even though I lived there. And I did an order in a LA County address, and it showed a subway tax for LA, 1.10% or something like that. So there's a lot of different tax jurisdictions that you're hitting, depending on where you're going into and selling into, that you have to deal with. And guess what? A lot of these can be different filings, so it makes it much more complicated. As I mentioned again, zip code, it's not as accurate. It used to be the most accurate way to do things. But with technology the way it is today, there's much better ways to do it. And then documentation. You want to make sure that you're keeping all the records of everything you've done. I want to say that you have to hang on to everything for up to 7 years you can be audited for. So you've got to hang on to that information for that amount of time, from taxes and certificates to details on your filings and everything. Not easy. It's a lot of paper, but it's unfortunately part of the process and something you're required to do. And if you don't have the information, this is where they get you on the audits. You, again, may have done everything right, but if you're missing the backup information, this is the type of stuff that you'll get dinged on an audit for. Automation, obviously the more you can automate, the better it's going to be. And as much as people try to do it correctly, when you have humans making decisions and doing the information, you leave it open for error. By automating the process, you're taking that human error out of the equation. You're saving time because there's no question it's going to be much quicker to do it through an automated fashion than manually. It's going to be a lot more accurate because you're using technology to make those decisions. Products like Avalara, what we offer, uses geospatial technology, which is a nice fancy word for longitude and latitude. We take an address and we turn it into a longitude and latitude and assigned jurisdiction down to that rooftop level. So we can actually differentiate between 2 buildings side by side. We can differentiate if a building is in 2 different tax jurisdictions. I have a client that's buying the software. They pick up trash at malls around the country. And they have certain malls that are in different taxing jurisdictions. One mall in 2 or 3 different taxing jurisdictions, believe it or not. Well, they just punch in the address, and our system will know exactly which jurisdiction is in and knows exactly what to charge people using that rooftop level accuracy. But the idea behind this is to mitigate your risk. I'd love to say to you, by buying an automated system, you're going to save all kinds of time and money, and it's going to be much less expensive for you to use our system necessarily or somebody else's system like that than it is manually. It's not always the case. It is the case many times, but it's not always the case. The idea is to lessen your risk come audit time. Audit's going to happen. There's no question. We want to mitigate the risk, so when the auditors show up, they're not there long. They're in there, they find what they need, and they're out the door as quick as possible. So you can get back to the data operations, day-to-day things that you do. And it's going to be much more efficient. And it definitely increases, the profitability in many cases. You always have the option of outsourcing the research around jurisdictional boundaries and the calculations, but generally that's going to be high cost to a client. It obviously reduces your risk because you're hiring an expert to do the research, but those are generally going to be high cost items. Then you've got other clients that they don't do any research. They just this is the way we've always filed in these 5 states, this is what we're filing. We're not really concerned if we've got Nexus in other areas because nobody's coming after us. They're hiding from reality. And I hate to say this, but I talk to a lot of people that just want to throw their head in the sand and say, I've got too many other problems. Until somebody comes knocking at my door, I'm not going to worry about it. And that's not the best way to manage this process because, again, the risk of being audited is higher than it's ever been. And the last thing you want to do is have an auditor show up and not be prepared for it. Avalara, we feel it provides high value, lowers your risk, and a generally lower cost than what you're going to be doing traditionally. It's an automated solution that can make it much easier to manage the whole entire process. From sales tax to consumer use tax, compliance, certificate management, as well as tax services. When you think of Avalara, think of ADP, what ADP does for payroll. They can just do the calculation and you can take care of your own filings, or we can take care of the calculation, manage the exempt certificates for you, help you manage the exempt certificates for you, I should say, and file for you. Take on the responsibility of filing on behalf of your company, as well as help you with anything else around sales tax-related issues, from state registrations, deregistrations, voluntary disclosure agreements, audit defense, anything that a CPA can do for you. We have CPAs on staff that can help you with around sales tax, because it's not an easy process. We are experts at sales tax. This is all we do. So we feel we're in a great position to help clients navigate a very difficult process. We are a cloud-based software program, so we're housed in the internet. We integrate with over 180 different connectors, from ERP programs to POS systems to e-commerce sites, and that grows on a monthly basis. And we want to provide you with an end-to-end tool for compliance. So no matter what your needs are, we have solutions for you that can help you streamline this process and make it much easier to manage. We've got clients that process tens of millions of transactions a year, and clients that are 200 transactions a year. Clients managing 100 certificates a year and 5,000 and 100,000 certificates in a given year. So don't feel that your company is too small or too large. We have different products and services for all different types of company sizes. The idea behind our software is to provide you with a solution, one solution, no matter where you're processing orders or creating quotes where you need to see sales tax. Whether it's an e-commerce solution or a point of sale or an accounting system or some custom application that you've created to place orders on. Maybe you're a service organization and this is your service module. No matter what it is, a connector can be used to feed that information to our dashboard so you have one place to go to have all the detailed information around your transactions. And when I say detail, I say it's down to the actual transaction level. So you can see as a whole, what are my overall sales tax across an area, individual states, individual municipalities, and you can drill down within the dashboard down to the individual transactions to see what checks was charged for what individual line items on an invoice. In fact, what a lot of clients will do is when they get that call that happens from a customer that says, hey, you charged me the wrong sales tax, a lot of clients will actually go into the dashboard, pull that particular transaction up, drill down, and do a print screen and send that out to the client with the detail of the tax jurisdictions, how they came up with the assignment, and so on. So I think there's a one throat to choke type comment that a lot of people use. This is one place to go for all the information, no matter how many different systems you have. You may have 2 different ERP programs, but no matter how many systems that you have, all that feeds into one dashboard. So it's easy access to that information. And as I mentioned earlier, from a calculation standpoint, we can handle it no matter where it's coming from. We do address validation within the system. It assigns the jurisdiction, decides the product taxability, sourcing rules, and provides you with the reporting. From a certificate management process, the system can launch an email out to a client that has the complete, you could have the complete look and feel over that email. It comes from you. They click on a link. It asks a series of questions. The client answers to those questions. Based on those answers, the system knows what form to pull up for them. It pulls that form up, they sign online, hit submit, you're sent a copy of that form for approval to make sure they didn't fill out Mickey Mouse as a name. And then once you hit approved on that, that particular certificate can be associated to that transaction. So every time that client places an order, it's going to be associated to that certificate moving forward. So when the auditor comes in, you just provide them that information and you've got all the backup that you need. So it lets the software decide whether the certificate on file is up to date and current. As I mentioned earlier, Florida, certificates expire. So it allows you to manage that. If the certificate is expired and somebody goes in and places an order, it's going to put tax on that order until an updated certificate is on file. So in those situations, you then launch a new email out to the customer saying, we need your updated certificate information. They click on the links, answer the questions, sign online, hit submit. You've got that back relatively instantaneously. You can be proactive and run reports. So if you sell into Florida and you need to collect tax exempt certificates down there, you can run reports on a periodic basis to see who's expiring in the next 3 months and proactively send them an email out requesting new information for their updated certificate. Or if you're like most companies where they wipe the certificates out every few years, which we recommend, this is a good way to collect those. No faxing. Just go through, launch the wizard, send it out, and what we find is 80 to 85% of your customers will respond after the first or second notice. That way you're only managing a small percentage of people that haven't responded. And then returns. As I mentioned, we can handle filing a remittance of sales tax for a particular client. If you're allowing us to do that for you on your behalf, you're still managing the process. You still control the process. We're just the conduit to facilitate that. So by the 10th of the month, you go in and approve the dollar amounts that we have for sales and sales tax in the different areas, and then you wire transfer ACH the money. We guarantee that we're going to file for you on time, and we take on that responsibility. And if we don't, we pay the fine and we take the hit. And our product is scalable. We're processing in, about 1.6 billion transactions through our system in a year, and filing about 500,000 tax returns for our clients on a yearly basis. And roughly about 4% of the sales tax revenue within the United States that was generated last year went through our system. Obviously, this is a software program, so I think you guys have probably all heard this in the past, where software never sleeps, doesn't take vacations, always accurate, and so on. I mean, that comes into play more so with our product because of how complicated sales tax is. But obviously, those are some huge advantages to the software. Our customers love us. We take a very difficult process and we make it much easier to manage. We have an easy implementation process. We're taking over 120 clients roughly live every month, and we have a team of individuals whose sole job it is to get our clients live. Their job is basically to get you implemented, get you up and running, and get you committing live transactions onto the system. Average implementation time varies depending on the product and depending how complicated the clients are, but an average implementation for Sage 100, for example, is 30 to 35 hours start to finish, including training. Average Sage 500 client is about 40 to 45 hours start to finish. NetSuite, I want to say it's around 35 hours also. So depending on the product, as you can see, it's not your atypical software implementation. It's a relatively easy implementation process. Hell, we've been known to get clients up and running within 2 days sometimes when they're in a situation where they need to get up and running. I had a demo the other day that I did for a client, and he said, Sean, I love what I see, but the problem is I don't know you guys. I don't know who you are. I've never heard of you. You're not a publicly traded company. How do I know you're going to be there in a year? And it's a valid point because a lot of people haven't heard of us before because they haven't looked into these types of programs. So I find it beneficial to kind of talk about Avalara a little bit. We have over 10,000 customers, and that's growing on a monthly basis. and some other information regarding Avalara and what I talked about earlier as far as the amount of sales and transactions that we're emitting through our system on a yearly basis. One thing I'd point out here is we are part of the Streamlined Sales Tax Initiative, so we are certified. And I think we were one of the first couple of companies to be certified. And then just some more information regarding, who we are and different accreditations that we've gotten over the years. So we've been around. We've been around for 8 years, and we're growing. And we've had 100% growth year after year for the last few years. I think this slide says it all. And I mean, we are the most accurate product out there, easiest to use than anything else out there. I was talking to a client that's considering our product that's running Sabrix, and she said, Sean, I just want to know 2 things. I want to know if I change my state where I have Nexus in, how many months will it take me to do that? And if I change some taxability on if I buy some new products and we're going to start selling those, how many months will it take me to get those into the system? I said, months. I said, how many hours? It's going to, Nexus is literally a 2-minute change in our system. Taxability is just a matter of getting the products into our system, which takes can be done, depending on how many that you're doing, can be done in less than an hour. She didn't believe me because she's using Sabrix, and it takes 6 months sometimes to change those things. And you don't have 6 months to make those changes because the states change these things so frequently. You need a system that does this for you, either from a tax law change perspective or allows you to change your Nexus study or taxability information easily. That's what we offer. So anybody that would say that they have a more accurate, faster product than what we offer, I'd love to put my product up against anything else out there. Okay, I want to thank you guys for attending the webinar. We'll be opening up for questions at this point, but we do have an offer for any client that does purchase by the 29th of March. We are offering free gold support to be included with that. And there are some good advantages to gold support that we can talk to you about. So there's some great value in that. So at this point, I'm going to stop and open it up for any questions that you guys have.
Thank you, Sean, so much. You did a great presentation. And we do have a question. This question is, if we are audited and we're using your product, what do you do to help protect us through that audit?
Well, as far as what we can do to help with an audit defense is if it has to do with how we've calculated particular taxes or our interpretation of the particular tax, we can actually provide that information directly to the auditor on how we came up with those, how we did the sourcing, or how we came up with a particular tax rate. And that's automatically included in what we do. If you need audit defense regarding taxability, how you decided that this is taxable this way, that's something that we can offer as an additional service. See, a lot of people think that by buying our software, all of a sudden they're going to be compliant. What the ideal client is a client that understands where they have Nexus and a client that has done taxability studies on their products and services that they offer, so they know where they're required to file, and then they know exactly how stuff should be taxed, and then they use that information to implement our software. That's the ideal client. So depending on where the issue is in the audit, it's either included in the service that we already offer or it's something we can provide additionally. So basically think of it this way. If it's an issue with the software, that's something we're going to help with. If it's something as far as the tax decision is, as far as how something is particularly taxed, then that's something outside of that, outside the software, if that makes sense. That answer the question?
Looks like that answers the question. And then I just wanted to remind the audience, if you do have a question, please go ahead and use the raise your hand feature right next to your name, or just click on the question mark and indicate your question manually, and we'll go ahead and read it live. I don't see any other questions.
And don't be afraid to ask. I may not know, and if I don't know, we'll get you an answer. I wish I knew everything, but I'm only doing this for a year, so I've only scratched the surface on sales tax. But more than happy to answer any questions that you have.
And I had a comment myself. Oh, we do have a question. What is the pricing, Sean?
Pricing is a difficult question to answer because it's based on each client. We are a transaction-based product pricing model, which means a transaction to us is generally going to be a posted invoice. Now, there's some caveats to that, but generally think of a transaction as a posted invoice. What we would need to do is understand how many transactions are going to flow through our system through the course of a year in order to provide you with pricing, as well as we need to understand where you need to see sales tax. And what I mean by that is if you have all your orders that go through your ERP program, for example, and there's no orders done through anything else, then you just need an ERP connector. We need to understand the transactions that are going to go through the system, and I can provide pricing very easily. But if you have an e-commerce site that is a system we already have a pre-existing connector for, then there's going to be a cost associated with that. If it's something we don't, a connector can be created, but we need to understand more about that program before we can understand what's involved in creating a connector for that. So no, I think someone said this a long time ago, and I like it. A doctor can't prescribe without diagnosis. I can't price it out for you without understanding what your needs are. But to give you some ideas, I can throw some numbers out there for you. 3,300 transactions. So for somebody who needs to flow 3,300 transactions through our system in a year, we have two different product levels. It can range up to $2,500 per year for that many transactions. Your cost per transaction will go down as your transaction volume goes up. So like 7,500 transactions a year is going to run, about $5,000 per year. But the key to this is that you don't necessarily need all your transactions to flow through the system. Sometimes you generally are only going to set it up to have your taxable or the states you have Nexus in transactions. So if you really want to know accurate pricing, what I'm getting at is let's set up a call, talk about what you got going on. We can answer a few questions, ask you a few questions, and based on those answers, we can provide pretty accurate pricing based on that. So that was my way of not answering the question because I can't answer it correctly.
So I don't see any other questions. Hopefully that answered your question, Nancy. If you have any more questions, please feel free to raise your hand or click on the question mark. And Sean, I noticed that you had palm trees on every slide. What does that symbolize? It's kind of your brand.
It's kind of our brand. It's, our goal is to make sales tax less taxing so people can relax more. So there's always been a theme of palm trees and margaritas, basically, with the Avalara. If you go to any events around the country that we're at, any trade shows, we're pretty easy to find because we've got a tiki hut with a lot of orange and a margarita machine. So that's always been kind of the motif is not the word I'm looking for, but kind of been our our signature. So we had a kickoff for our sales meeting in Bainbridge Island earlier in February, and we all ended up at one restaurant or a casino, and everybody had orange on. I had some guy come up to me and say, "Well, what's with all the orange?" It's just kind of what we do. So let's just stand out a little bit more.
And you're a fun group. I can testify to that from the top down. All right, well, I don't see any other questions, so please let us know. You have the contact information there, and we will be in touch and touch base with you.
Is it possible to send? I'm sorry. Is it possible to send everybody out the Aberdeen brief? Can you send that out on our behalf to them?
I sure can. I just would need it, and then I'll forward it on to them.
Okay, guys, I recommend taking a look at that and reading through that because it's some great information for you. And it's done by a third party, so it's very beneficial. So, well, I appreciate everybody's time today, and if you have any more questions, let us know. But thanks again for participating.
Thank you, Sean. All right, you take care. Bye-bye.
You too.